All right, what up YouTube? Welcome back to the channel, another episode of the Crypto Breakdown. I am your host, Ryan Maddow. We're going to dive right into it today. Bybit, placing trades using take profits, stop losses, limit buy orders, market buy orders, everything about actually executing a trade on Bybit. And we're going to dive back into actually using the leverage trading calculator as well. This way you guys know all about how to actually place and execute a trade on Bybit. I know I made a really long in-depth tutorial, so I've already covered this in that, but this time I want to go into it and dive into it on a deeper level. So let's dive in. Let's get it. And this video is for entertainment purposes only. I'm not a financial advisor. I'd never advise you to invest in crypto in any way, shape, or form. Thank you. Let's get it. All right, squad, so we're going to dive right into it today. We're going to talk about placing orders on Bybit. Everything you need to know about placing a limit, a market, a conditional order, long, short, stop losses, take profits, everything about how pricing and fees work. But in order to do that, I need to show you a few things. So when we're over here, we have two types of trades we can basically take: inverse perpetuals and USDT perpetuals. Inverse perpetuals means if I have Bitcoin and I want to take out shorts or longs positions, I need to actually have Bitcoin in my account. When I place that trade, I am actually holding on to Bitcoin. I'm leverage trading it. And when I close out that trade, I'm going to get paid in Bitcoin. And I'm also going to pay funding with that coin. USDT perpetuals means when I'm trading that coin, I'm going to have USDT on my balance. I'm going to purchase Bitcoin for the trade. When I close out the trade, it's going to pay me my profits and close out the trade all in USDT. And I'm also going to be paying or receiving funding in USDT. How funding rates work is you have a funding rate for the trade. That's what allows you to use leverage. And that's what happens when I have a 10x long or short and I come over here and I see the value for this position. If I was going to limit into Ethereum at $2,800, the contract size, it's all based off of contracts. I would be taking out a contract for one Ethereum. It would equal $2,800. But since I'm using 10x leverage, the order value is only $284. So all I'm able to lose, or all I'm risking losing, is this $284, not this $2,800 like on other exchanges like KuCoin's a scam. It's just a joke how these other exchanges operate. But that being said, the whole contract thing is kind of confusing for people. But if you ever want to know like how much your trade's going to be for, or how much you're opening that trade for, or what you're actually risking losing, it's just down here, what's in your open short or open long. And you can see there's $284 for a short, $265 for a long. The position is just a little bit different because the math behind it, when you're shorting something, it's 20 divided by 1 plus the price. It's really confusing. I'll show you guys the algorithm, but when you're shorting something, it's -1. When you're adding something, it's +1. So that's the difference between long and short, and that's why you see the slight variation in price difference. Now you also have isolated versus cross. So isolated means you're only going to risk what's in this red box. If you do cross margin, it'll continue to keep you in that position and hold that position open until you get liquidated and your entire balance is gone. So you definitely always want to make sure that you're using isolated, not crossed. When you have a position opened, if you want to increase or decrease the liquidation price, you can come up over here and just change the slider. Now up here in the top right corner, this is a profit versus loss calculator. So anytime you're entering a trade, you need three things for a trade to be good. You need an entry point, an exit point, and a point of invalidation. So before I show you guys this calculator, let's jump over here on the charts and let's pull up Ethereum and let's take a look at something. So in order to make up a great trade, you need to have three things. And if you don't have a great trade, you have no trade at all. So if you can't come over here and give me an entry point, an exit point, and a point of invalidation. So what do those three things mean? Entry point is self-explanatory. You're looking for a point when you want to enter that trade. So I'm going to show you guys how to short something since we are in this major downtrending market and most of the money I've been making is from shorting. Actually, all the money I've been making is from shorting. I'm looking at Ethereum right here and I'm trying to figure out how high price can go. We know we have the Elliott wave formation and I got to just check and see if my formation is still valid. So I want to decide how far did Ethereum retrace on this most recent retrace. And we can see normally I'm not looking for a retrace more than 61% or to the 0.618. But since it found support and bounced off right there at that lower level and started to push to the upside, just because it came a little bit lower than 61%, I'm okay with that. How does the Fibonacci tool work, right? From point A, the peak of this formation, down to the lowest retrace point, down to this point at this lowest corner, right? right? From point A, which is 0, all the way up here is 100%. So when you're talking about a retrace, they're talking about that this formation that Ethereum retraced 61.8% from its low to its peak. It pulled back 61.8%. Now when we're talking about a third leg push, the third leg is most likely always the longest but never the shortest. So since it's already longer than leg 1, we know that that trade is good. Price pushes to the upside, price starts to retrace. How far am I looking for price to pull back on this retrace? Normally to the 0.382 like clockwork, and it's almost there, guys, like dead freaking on. If I move this up here, we can see it was so freaking close to bouncing right here. Really close. So this retrace is good. We hit the 0.236. Most of the time I'm looking for price to come all the way down to the 0.382. So now Ethereum's pushing to the upside again. I'm looking for a short entry position. I'm kind of trying to make an estimate of how high price can push up to before it starts to retrace. And what can we see here? Draw here, we pin to the low, push to the high, and push to the upside. And where did price just spike out, guys? The 0.618. Now that to me right here, you're hitting this double top right here. Price came down, it got rejected right here, right at it. Then it retraced, and now it's making another push to the upside. So on this next push to the upside, I'm trying to figure out how high might price go. This is what they call making an extended fifth. And it's an extended fifth because I still have a trend right here. When this pulled back and started to push to the upside, these candles started a trend line. So Ethereum hasn't broken this trend. So I'm still working on that fifth leg. And since it's going to be an extended fifth, where could price be headed to? Now I'm going to be looking for price to head up to these higher targets because this is the lower fifth. This is now my extended fifth. Most of the time, I want to get 85% out of a trade right here. So 2,700 would be my first target where I think ETH could push up to. My next target would be $2,791. And my highest target, the absolute peak, would be $2,843. And what do we see up that $2,843 mark? We see a major wall of resistance. We can look over here and we can see 1, 2, 3, 4, 5, 6. Now, 9 times price has shot up to this level and prices got rejected. So personally, if you notice, majority of times price has been lower and lower. Kind of came up to the same here, has been a little bit lower. So the lowest price up here, if I'm shorting, I'm not really worried if price is at 2,910, 2,928, right? Like these, obviously I'm not expecting it to push up to this highest number of 2,971, but that is the game. That is the area where I'm looking for price. So when I start taking out a short, I kind of want to aim for the highest possible price. So when I take out my short position, I'm going to be saying I'm going to be looking to take out a short at, let's just go right here. Let's just bring it a little bit lower to make sure that we actually get in the short we want. And we'll say 2,850. We'll just put it at the highest level. So now I have an entry point. My entry point is $2,850. Now, if you notice, every time over here, prices hit these levels, it's dropped drastically. But that's not always guaranteed. For the most part, you're looking for a retrace or a little bit more of a push to the downside. So you can come over here and you can find your exit point as long as you have a method and you're saying, okay, if price drops 10%, I'm exiting that trade. Over here, price dropped 20%, right? Over here, after this peak, price dropped 10%. For the most part, it looks like about a 10% drop. So if we came over here and we say we enter that trade at 850 and a 10% drop would put it down to 2,550. Now what's next? Now we need a point of invalidation, but I also want to make sure that my exit point is actually, in the realm of possibility. And I showed you guys how we just measured for sure. We got that locked down. We know that we've seen it, retrace by 10% and test these levels. Now I want to put a line right here at 2,550. And when I draw this line, I want to make sure that there's no key areas of resistance or it's not like a major volume of support. And you can see here where price hits this level right here, price hits it here, bounces off. Price push below it here. That's what I want to see. Price is able to break below. If I came down all the way here, I would say, look, right here at this level, there's resistance up here. So when price has to come through that major area of resistance, you really normally never want to short and go short into resistance. I also want to make sure that in order to take my profits on a trade, I don't have to break through Fort Knox to get to my profits, if that makes sense. So it's all about setting realistic expectations. Now you can also fib it out. And if I say from here, price pushes up, I can also grab my fib tool. And we know we started that third leg right here. We started that push up on that fifth leg right here. This was the farthest right here on this retrace price came. We pushed to the upside. My 0.618 is normally my target after a fifth leg push to the upside for a retrace, and that puts me at 2,600. So instead of trying to be greedy and hold out for that last $50, and you can see right here where my retrace target would be is actually where price is at right now. I'm going to come up here and we're going to change this one to 2,650. That way we enter the trade at 2,800. We're going to use some leverage and we're going to exit that trade. We're not going to be greedy. We're going to exit that trade a little bit above where price most likely will come down to. Now we need a point of invalidation. What is a point of invalidation? If our entry price is at 2,850, we want to make sure that when we're exiting that trade or when we enter that trade, if price continues to go to the moon, we might want to think about getting out of that trade. And we can see the highest price has been able to push up over here was $2,971. And let's see what that is as far as percentage goes. So the highest target level is $2,972 from my entry point at 2,850. I would need to have at least a 5% stop limit on it. I personally only like to enter trades where I'm actually scalping with a 1 or 2%, but anything under a 5% I think is fair. That's fair risk to reward ratio. So we come over here and now my point of invalidation or my stop loss. So we now have our entry point, our exit point, and our point of invalidation. Now it all goes based off of risk versus reward. Is the risk versus reward worth it to take out this position? Let's find out. So we set our upper stop limit at $2,975. We have our target take profit at 2,650. Risk to reward ratio is a 1 to 1.49. In my personal opinion, that's not the greatest trade. I normally am looking for a risk to reward ratio of at least 4 to 1. But once I'm in this trade and I'm shorting in this type of market, if price does come down, it's most likely going to come down to that 2,500 mark where we talked about taking profits originally. And if I was able to actually manage that trade a little bit better and tighten up that stop loss and say I don't think price is going to be able to push above 2,900 because it's got rejected at this area so many times, now I can enter this trade with a 2% stop loss. I'm aiming bigger on my target. Now I have a 6 to 1 risk to reward ratio. So a 6 to 1 again is a great trade. So I'm actually going to go set this trade up right now on Bybit and I'm going to show you guys how we're going to do it. So I'm going to come over here to short. I'm going to make sure that my isolated margin is set. I'm going to make sure that my leverage is set to where I want it. And you guys know me, you should never be shorting ever as a beginner with more than 3 to 5x. So let's just be really conservative on this. Let's place a short with 3x leverage. We're going to come over here. We're going to make sure limit is chose. We know what our limit position is, but we also want to set a stop loss and a take profit. So we're going to sell short with stop loss and take profit. We're going to choose post only. That means in the time it takes us to enter this trade, if price spikes all the way up to here, it goes crazy parabolic and we're having a hard time actually getting this order submitted in time before price actually gets above where our limit order is. If we have post checked, it just won't execute the order. If you execute the order without post check, it might turn you into a taker instead of a maker. And then you might be paying a 0.75% fee versus making a 0.25% fee. So we're going to come over here. We're going to put our order price in for 2,850. We're going to do a quantity of how much do we want to risk? 0.1 equals $289. 2 equals $578. So if ETH hits up to $2,850, I'm willing to take out a short for $500, but it's over. So what I have to do is I have to come over here and I have to type it in 1.8. And you see, I just have to kind of finger it in until the price hits the target that I want. So I'm willing to risk $500 on this ETH short. If price spikes up to $2,850, I'm going to do it with 10x leverage. And you see, I changed that, but it didn't change up here. So you always got to make sure that when you actually change this, it's set up accordingly. So we can do 5 or 3. We can hit confirm on 3. And now you can see my short leverage changed. Everything else changes as soon as you change that. So we got to come back up here now and type it all in again. And now one contract equals $954 because my margin increased because I lowered my leverage. It's kind of confusing, but if you come over here to the leverage calculator and you talk about profit versus loss. So we come over here with 1x leverage, quantity of 1 Ethereum, entry price at 2,850, close price, we want to be shorting it, 2,650, gives us a profit and loss of $200 because we are betting 1. And what are we making? We're only making $200 because we are no leverage, just 1x. We enter the trade and price is 2,850 and we close it out at 2,650. We made $200. But what happens when I move my leverage up to 10x? My profit is still $200. Why? Because my margin just changed. When I increase my leverage, my margin lowers, and the margin is the amount of money that you're willing to actually bet and put on the line. So if you see when I'm dragging my slider, my margin changes, my leverage changes, but my profits still stay the same. So it doesn't really matter what leverage you use. Leverage definitely matters when you talk about getting liquidated, because when I have have 10x right now, my liquidation price on a short is $3,160. When I use 1x, my liquidation price is $5,671. So it's pretty crazy, the drastic difference there. But what's most important is understanding the trade that you actually want to take. So you can kind of come over here and mess around with this leverage calculator, and it takes you a second to wrap your head around how the fact that you can use more leverage and you change your leverage, but your actual profits still stay the same. So again, we want to come over here. We're going to sell a short. Our take profits will be 2,500. Let's jump over here. What was our target take profit level again? 2,450. We're going to come over here. We're going to end a profit at 2,450. We're going to put a stop loss in at 2,900. And you can see right now, if I enter this trade at $2,850, my stop loss at $2,900, if that target is hit and my stop loss is hit, I will lose $50. It's really that simple. So if I enter this trade like I have been lately with no stop losses and I get liquidated, I'm going to lose $954. So with 3x leverage and I'm margining one contract, my liquidation price on Ethereum would be $3,771. So if I have no stop loss on, price on Ethereum has to go as high as $3,771 to liquidate me. Now, in order to break even and actually get out of that trade, I need to make sure that price is going to continue to push the downside, because it would suck. And if price went all the way up to $3,771, I would lose $954. So personally, I haven't been using stop losses because we're in this downtrending market and I've been doing really good. I don't recommend it. So let's just say I want to be exiting this trade at $3,300. If price spikes up to $3,300, I'm going to lose $450 on this trade. If price hits my target take profit, I'm going to make $400. Anytime, I always want my risk versus reward to be fairly similar. So I'm going to push this down to say 3,100. There we go. Now, anytime I'm entering any trade, I normally want to manage that trade fairly well. So at the very least, I want my profit to be double whatever my loss is. So anytime I'm looking to enter a trade, I want to have at least a 2-to-1. So I'm willing to stay in and weather this storm and risk losing $200 at an attempt to make 400 right now. Just because of the market and how the market conditions are, this strategy kind of changes constantly. The best way to do this is actually the way I just showed you. You need to chart it out. You need to have set point of invalidation, but my strategy is a little bit different than your guys'. So I just wanted to show you guys how this actually works. So we're going to come over here and we're going to choose open short. When I press open short, it's going to place a limit buy order for one contract of Ethereum, but I'm only willing to risk $954. So I'm going to hit open up short. Over here under your active tab, it shows you that I actually have an open trade on Ethereum placed. I want to enter that trade at 2,850 and I want to hold that short until price dumps down to 2,450. If price spikes up to $3,050, I want it to take me out of that trade and I'll end up losing $150. My liquidation price on that trade is $3,700 and something dollars. Obviously, it can't go past your stop loss. And you can see that $954, now that it's open, was just deducted from my available balance. So my available balance right here now is $621. If I come over here and I cancel that out, it'll automatically put that available balance right here. And you can see over here on the charts, it instantly put my limit buy order right here. So if I want to adjust this trade, I can move it up to whatever level I want. If price starts spiking up and I'm like, okay, maybe 2,850 is not the best price to be entering this trade at, I can then just slide it up to say 2,900 and say, okay, if price spikes up to $2,909, now I want to enter that trade at that price point. And you can see over here, it now moved my order price to $2,909. And I can just adjust that accordingly and move it back down if I want. Now I'm at $2,831. So it's really nice how easy Bybit makes this. And sometimes you got to drag the slider up and adjust the price to the position that you actually want it to be in. Now over here, we have a market trade. So if I come over here to market and I type in quantity, one quantity of Ethereum, my take profit, I want to put in, because I'm going to go short on this, my take profit, I want at 2,450 and my stop loss, I want at 3,000. If I hit open short, it's going to immediately open a short right here at this price right now. That's what market means. Market means they're going to make your entry price right here. Whatever the market price is, you're going to mark it in. And this is where you're going to pay that maker fee. You're going to pay 0.075% entering the trade. And then when you close the trade out, depending on how you close it, if you market close it as well, it's going to do the same thing. Now, as far as conditional trades go, I can come over here. You can see open and close. If I had a trade open already, if this Ethereum trade was open and say I wanted to close it out, I could come over here and type in my one contract, because I know that I have one contract of ETH opened in a short. Come over here, hit close long or close short. It's going to automatically close the trade out for this current price right here. And again, you're going to pay the taker fee, which is 0.75%. But if I say I'm going to limit out, I want to sell one contract of Ethereum, which is my entire trade over here. Order price, I want to sell it for 2,900, and I hit close short. It'll close out that short when price pushes up to this point or drops down to say 2,450. Now you have what are called conditional trades. So when I come over here to open, I can open a trade based off a conditional set of parameters. You can go off an index price, you can go off the market price, or you can go off the last price. Last price means whatever the last trade closed out for. When the last trade closed out price was $2,620, I want to close out that trade. When somebody actually pays $2,620 for a coin of Ethereum or for one contract, I want my trade to be closed out. How much do I want to close out? I want to close out the entire trade. And this is where you are able to close out a percentage of how many coins you want to actually get rid of. And you can just do it simply just by putting in 0.25%, because they know if I had one contract of Ethereum, 0.25%, 50%, 75%, 100%. If I want to pay, say, $2,900 for a share of Ethereum, and I want to bet 75% of my portfolio, it's automatically going to take whatever your available balance is, and it's going to put 75% of that up here. And then again, you can see 75% of my portfolio is worth $456 because I only have an available balance right now, $621. Conditional, easy. So we've already covered the stop loss and take profits. That's really easy. We've covered the index versus market price. You have a last price. We covered that. You have a funding rate. So when you're going long, you are actually paying funding on top of your entry and exit fee because you're using leverage. And like I showed you guys, when you are taking these trades, and I want to take a trade for one Ethereum, and I change my leverage slider up here to 10x, what's going to happen? When this trade executes down here, it's then going to be a trade for 10x leverage, not just 5x or not just 3x. So it's very important to make sure that once you start opening trades over here, once the trade is open, if you are selected on Ethereum, you do not want to be messing around and adjusting your leverage over here because it's going to adjust your leverage on your position as well. So it's super important. When I'm going long and say my contract size was for $1,000, my one contract of Ethereum, the amount of money I risked over here in the red box was $1,000. We know it was 954, but we're just going to say 1,000. Every 8 hours, actually it looks like every 10 hours now for some reason, every 10 hours, you're going to pay a funding rate of 0.01%. When we're in a bull market and this exchange is really popular, you're paying funding every 8 hours. Right now, it looks like you're paying funding every 12 hours or every 10 hours. It just doesn't matter. You're still paying that fee quite often. So every day, if I have a contract size of $1,000 and I mark it into that trade, when I mark it in, I'm going to pay 0.0075, which comes out to $7.50. So now I have a maker fee for my entry of the trade. I have a maker fee for my exit of the trade. So now just to enter and exit that trade, if I mark it in and mark it out, I'm going to be paying a $15 in fees. Now say I keep that trade open for 5 days, and every 12 hours on that $1,000 trade, I'm paying 1%. It's $10 twice a day. To keep that trade open, I'm paying $20 a day. If I keep it open for 5 days, that's 20 times 5 equals $100. So just in funding to have that trade open, I'm going to be paying $100 plus the $15 in fees to enter and exit that trade. Total, to place a $1,000 trade and keep it open for 5 days, I'm going to pay about $115 in fees. Now, what's awesome about being a maker versus a taker? So when you're a maker, you're actually getting paid. When you're a taker, you're actually paying. So this was the mathematics behind being a taker. Now, if you're a maker and you have a $1,000 trade open, you make $2.50 twice because you make it in and you make it out. So $5. And then say you actually were going long again, you'd still pay the same thing. So you'd actually have a $5 fee credit, would come out to be $95. When you are a maker, you're saving about $20 for every $1,000 that you trade. Now, when you're actually holding a short, you are getting paid in funding. So if I was shorting the market, and this is why I've been shorting lately, because I can keep my shorts open and I'm actually getting paid. So after 5 days of holding a $1,000 position times 0.01, $10, and I get that twice a day, that's $20 a day. So if I am shorting the market and I am a maker, I make $5 for shorting on my entry and exit of that trade, and I'm making $20 a day. So after 5 days, I will actually be up. Even if my trade just breaks even, I will be up $105. I've explained this before. Kite Crypto kept a trade open, a short with 10x leverage, a $15 short on Bitcoin with 10x leverage for 495 days. And he was actually trading Bitcoin USDT pairs. So every 8 hours or 12 hours, he was getting paid funding. He was making up to $60 to $200 a day. And what it was doing is it was DCAing him in to Bitcoin the entire bear market for 400 something days. That's pretty crazy. And he actually let the trade liquidate himself because there was a couple times that price spiked up and almost hit that liquidation price and then went down, and he was able to keep that trade open for another couple hundred days. So it's crazy to think about how much money you're actually making in funding just to hold these fees, especially when the market's bullish. The more bullish the market, the higher fees people are paying, the higher the funding rate. So when the market gets really bullish, the funding rate's actually really high. If we jump over here and we just kind of scroll through these coins, it's not as bad on Bybit, but on exchanges like KuCoin, you could be paying 0.9% funding, which is just astronomical, guys. You're talking about paying almost 10% every 8 hours to keep a trade open. You best hope you're making a lot of money and crushing it. That's why every big YouTuber and every big player trades on Bybit, because the fees are so awesome, and those fees add up quick over time. You're talking about 5 days just for one trade. Keep that long open, that's $100. Now say you did that 5 different times, that's $500 every 5 days that you're paying just in funding fees and trading fees. That's a lot of money, guys. So not only is it hard to be profitable as a trader and be consistent when you add those type of fees in there, it's just really rough. And then also you have one other way to initiate a trade. If you're good at trading and you know you're going to be profitable, you have a really good entry point, you don't want to have to worry about doing all this, you can literally come over here and say, I want to buy one contract. You have your leverage set up here, it's already right. You can literally hit open long or open short, and it's going to automatically execute an order right now at this exact price for the contract size that you call out here using the leverage that you have set up in your slider. The last cool thing I like about Bybit is if you come over here and you drag this around, you can customize the layout of this platform to look like any other exchange. So if you're really familiar with how KuCoin looks or how Bybit looks, how Binance looks, Coinbase Pro, whatever the case is, you can literally come over here and customize and move things around however you like. Whatever way you like the layout of things to be, you could easily customize this whole interface to be perfect exactly how you like it. Over here on the right hand side, you have a 3D multiple chart layout. So if you're the type of person who wants to watch Ethereum, Bitcoin, and something else, you can actually have 3 different charts laid out over here. You can automatically do 4 charts as well. So if you want to monitor ETH, Bitcoin, USDT, and you can easily just come over here and change these. So like my favorite coins to watch right now are ADA, Ethereum, Bitcoin, but I always like Bitcoin in the top left, so I'm going to put Bitcoin up here, Ethereum over here, ADA down here, and Litecoin. Litecoin is probably one of my favorite coins to go long and short on because it plays the formation so well. And then same thing, I always like to chart off of the 1 hour time frame, so I'm always going to set my indicators on these charts to 1 hour. Or if I'm charting over here on TradingView on the 1 hour, on Bybit, I might come over here and set all my charts to 5 minutes. And that way, what that shows me is that every candle on this right now represents a 5 minutes worth of time, 5 minutes worth of price action per candle. That's all that these time frames mean. I strongly suggest, figuring out what works best for you, but what works best for me is definitely just having it on this type of time frame. Over here into the charts, if you're like me and you want to move the charts to kind of look how you want them to look, come over here to settings, and if you hit auto fit to screen, it's going to automatically fit it to the screen. Like I can't pull that up or down. I don't like when that happens, so I turn that off. And I just come over here and I can actually pull the chart up, grab it on the sides, move it up and down. And I'm going to make a whole nother video on actually adjusting charts and settings and indicators over here on Bybit. And the last thing I want to point out too, if you come over to the promotion tabs and you go to latest promotions, this is a great way to literally make free money. Right now, if you sign up and you guys use my discount code, Team No Shill, the link will be down in the description. Depending on the size of your deposit, you can get up to $2,000. You can get up to $1,010. So you have the deposit bonus bash. You come over here, you look just for depositing $500 worth of crypto or 0.01 BTT, 400 XRP, you get $15, guys, in free money to trade. If you're a baller and you got 2 Bitcoin, I just showed you guys how to turn 1,000 into 15,000 in 30 days. You could easily come over here, deposit 2 Bitcoin, and they're going to give you $1,000 bankroll to play with for free. So on top of that, you can also come over here and earn a ton of crypto just by completing and doing these different tasks. They always have promotions over here. Right now, this is probably one of the coolest ones that I've actually seen in a long time. Right now, you can actually deposit money with a credit card onto Bybit's exchange, and they are going to credit you the credit card fees for processing that transaction. That's how awesome Bybit is, guys. I'm telling you guys, this exchange is on a whole nother level. Come over here to the rewards hub right here. So you can come over here. All you have to do is hit claim, and you can get this $50 big deposit. First time bonus deposit, $50, guys. So once you sign up with my link, you're going to get a big hot deal, $50 deposit plus whatever the bonus is that you use for signing up for my link. BTC deposit, $5. So if you make any BTC deposit over here on Bybit, they're going to give you $5. Follow Bybit on social media. Watch this. I'm going to make $5 just for following them on social media. Now, if I come over here and click it, claim it, a $5 coupon has been awarded. You can view it in my rewards. I just made $5 just for following Bybit on on Twitter. Actively trade for 7 days. I don't think I've been absolutely... Oh, wow, I have been trading for 7 days. Look at that. They have tons of different promotions. So if you guys sign up under my thing, you guys can be an influencer as well. You guys can over here, anytime you share and invite anybody, you're going to earn a $10 bonus, and your friends are going to earn a $10 bonus, and you're going to get entered to win a $500 giveaway. I can't tell you the amount of people that I've seen posting about winning these giveaways. So Bybit actually does this and holds up to it, guys. This exchange is off the hook. I'm not just saying that. It's so much better than KuCoin, guys. All right, YouTube, so that's a wrap on my Bybit tutorial. Thank you guys so much. Everybody who hits that like button, everybody who hits that subscribe button, I can't thank you guys enough. Everybody that signed up for my crypto coaching digital course, you have no idea how much I appreciate you guys. So we just broke that 300 student mark. I'm so excited, guys. I can't tell you guys how much I appreciate each and every one of you guys. I will try to go live every morning between 6 and 9, but the live streams are not included. That's just a bonus. That's my way of saying thank you guys so much for signing up for my crypto coaching classes. You guys know how busy I am and how little time I have, but I want to give back and I want to help you guys as much as I possibly can. So every morning we're going to go over the market. The members only live chat will be activated. That way we're not getting spammed. There's not a bunch of people flooding the comments, so I can't help you guys. And it's great because we've only been having about 50 students in the live streams every morning. So it's really a great way if you guys want that one-on-one training with me. It's a great way for you guys to, keep in contact, reach out, let me know if you guys need any help with anything, if there's any other tutorials or videos you guys want me to make. I'm trying to put out 5 videos a day on YouTube. So the more info you guys give me, but I can't keep up in the telegrams. There's just hundreds of people in there. And I looked at it the other day, and between all of my telegrams and discords, I had 5,000 messages in 24 hours. There's just no way I can keep up with it. That being said, the live streams are the place to keep in touch with me. Come join in the live streams. Ask me questions. If you guys need help with anything, ask it in the live streams. That's what I'm there for. As far as reaching out to me on Instagram or other platforms, I know you guys want to send me private messages, and I would love to answer every single one of them. I can't sleep any less than 3 to 4 hours a night, guys. I love you guys. Try my best to keep up with everything, but it's too much. So that's what the live streams are for. That's why we're back on the live streams. I want to see you guys crush it. So do me a favor, guys, hit that like button, hit that subscribe button. Can't wait to see you guys tomorrow in the live streams. And if there's any other content, do me a favor, drop a comment below. So I love you, squad. Can't wait to see you guys in the next video. Peace.